Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news commodity prices are facing some headwinds, and they may get worse as trade prospects dim and the de-risking from China builds. Today's full dairy auction brought lower prices from both last week's Pulse event and the prior week's full event, but the dips were largely as expected and foreshadowed in the derivatives market. In the event, overall prices were 2.8% lower than the last full event, but with the New Zealand dollar weaker in New Zealand dollars, the decline was just 0.7%. Today's retreat doesn't interrupt the 2024 rising trend, however, so it seems unlikely any farm gate payout forecasts will be adjusted because of this. Demand from China was lighter today, but they may just be because they've already built their requirements for their upcoming Chinese New Year holiday season. US retail sales, as monitored by their Red Book survey, were a healthy 4.8% higher last week than the same week a year ago, and November retail sales, as reported in their official data, were up 3.8% from the same month a year ago, the best gain of 2024, and that was driven by strong car sales there. And Canada's November CPI inflation rate came in at 1.9%, pretty much as expected. Their central bank will be happy with that because it allows them to continue to unwind their policy rate, which is at 3.25% and next reviewed at the end of January. Across the Pacific, we should note that both Nissan and Honda have begun merger talks. In China, new official data shows that capital flight by foreign investors reached a record level in November as the de-risking trend rose to a new urgency. And international airlines are also pulling back on their China routes. One of the things to come out of the recent Central Economic Work Conference is that Chinese leaders reportedly agreed to raise their budget deficit to 4% of GDP in 2025, its highest on record there. For reference, the New Zealand equivalent is 2.4% of our GDP. In the US, it is 6.3% of theirs. And we should probably note that there was a general easing of commodity prices overnight, not just dairy products. The US Treasury 10-year yield is now just on 4.39%, and down 1 basis point from yesterday. And the price of gold will start today at $2,641 an ounce. That's down $10 from yesterday. And oil prices are down $1 to just on $69.50 a barrel in the US, while the international Brent price is down at $72.50 a barrel. And the Kiwi dollar starts today at just on 57.6 US cents and down 20 basis points from yesterday. But against the Aussie, we're up 20 basis points at 90.9 Australian cents. However, against the euro, we're also down 20 basis points at 54.8 euro cents. That all means our trade-weighted index starts today at just on 67.6 to be down 20 basis points from this time yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.